Okay guys, so in this video we're going to be doing the cash generated from operation node, right, which is node number 1 of the cash flow statement. We have what is known as the what cash generated from operations, right? So the cash generated from operations falls under the operating activities in the cash flow statement, right? Now the first thing that comes into the cash generated from operations is what is the net profit before tax, right? Meaning this the net profit before tax has been taken into account, right? Meaning what are we trying to do here? Maybe let's say for instance they'll tell you that your net profit before tax is maybe 200k, right? Your net profit before tax is 200,000, right? Now what are we trying to do in the cash flow, in the statement of cash flow? So in the statement of cash flow, guys, what we know is that we are focusing on the inflow and the outflow of money, right? Meaning when money comes in we have a positive, and when money goes out we are putting a what, a negative, right guys? You can put these brackets here, or you can put a negative to show that money is coming in and money is coming out, right? Meaning again guys, from the statement of cash flow, guys, we're trying to remove the, we only want the flow of money, right? Meaning anything that is not of like anything that is non-cash item, we're trying to remove them. Like for example, we have something called depreciation, right? Depreciation is just an amount of depreciation like that is calculated on our assets, right? And then, or we can just say it's the reduction of the value of our assets, right? And then we also have what, interest expense, meaning these are what, these are what, our non-cash items. So we're trying to remove them here from the what, we're trying to remove them from the net profit before tax, right? Now if you remember from the statement of profit or loss, these two things here, meaning depreciation and interest expense, they were subtracted at first when we're doing our statement of financial of our profit or loss, right? Meaning it means from this amount these two amounts were subtracted. Meaning how do we remove them from this 200,000? For the fact that at first it was subtracted, it means now we're going to do what, we're going to add them. For instance, they'll tell you that your depreciation is equals to maybe 2,000, right? And your interest expense will be maybe let me just say 3,000, right? So you're going to come here and say what, you're going to come here and say depreciation. Instead of subtracting it, no, we're adding it because initially we subtracted it. Now how do you cancel it? You're gonna add it, right? So I'm gonna add what, 2,000. I can just write 2,000, it shows that I'm adding, right? And then we have what is known as interest expense, which is what, 3,000. I'm adding it, right? Now this net profit before tax plus depreciation plus interest expense will give us a what, it's up total here, right? So we are going to add 200,000 and this, which is going to give us what, 205,000, right? Now we're having what is known as our change in working capital, right? So we're gonna say the net change in working capital, right? So the change in net working capital, we have three working capital, right? Meaning our three working capital is known as what, is known as our inventory, right? And it's also known as our uh, receivables and payables, right? But what are we looking for here? We're looking for the change. I can also say change here. Change in inventory, change in receivables, change in payables, right? Now I'm going to teach you how you're going to how you're gonna interpret these changes here. Yeah, let me quickly erase here. So how are you going to interpret these changes? Okay, so for instance guys, now let's say we have inventory of, maybe let's say this is 2021 and then this is 2022, right? Meaning let's say 2022 is our current year, right? So let's say maybe for 2021 our inventory was 2000, right? And now in 2022 our inventory is 5000 now. Ne? Now what is the change? The change is the difference between the inventory that we had in 2022 2021 and the inventory that we had in 2022, meaning 5000 minus 2000, which is gonna give us what? 3000. This is the change in inventory, right? Now you ask yourself a question. This amount increased from 2000 to 5000, right? Meaning if our inventory increased, it means we bought more stock. So when a company buys more stock, what happens? We're taking out our money and we are buying what? The stock, right? Or we're buying inventories. Let me just say inventories, right? So when your inventories increase, it means that there was an outflow of money, because what caused our inventory to increase? It was caused by us, the company or the entity, buying the goods or services, right? What do we buy the goods and services with? With our money, right? So an increase in inventory result in what? In an outflow of what? Of money, right? So the difference between these two amount will be written here as a negative amount, which is negative 3000 here. And you can simply show them your calculations here by saying what? 5000 minus 2000, which is gonna give you what? Negative 3k, negative 3000, right? So this negative, it shows that this money is going out of the company, right? Let me make another scenario. Let's say now in 2021 our inventories were 5000, and then in 2022 our inventories reduced to 2000. What happened? It means we sold our stock, meaning our stock was more at the beginning. Now at the end is what? Is less. What caused our stock to decrease? It means we sold them. And when you are selling stock, what happens to our money? We are receiving money, meaning when you come here, you're gonna put it what? You're gonna make it positive to show that there's an inflow of money, right guys? So yeah, I'm going to move to receivables now. I'm going to move to receivables. Please interpret it like this guys. Always in the exam or whatever in the test, please make sure you interpret it like that, right? Now let's say in 2021 again, in 2022 we have a receivables of, let's say 3000, and then 2022 there was 6000, right? Now in this case guys, when it comes to receivables, we're talking about our data, right? Meaning in this case guys, when our receivables increase, it means that we sold more goods or services on credit, right? Meaning we did not receive any money from our debtors. It means therefore this is an outflow of what? Of money, right? Because this had if we had 6k here and 3k here, it shows that our receivable decreased. What happens when your receivables decrease? It shows that one of our customers paid us, meaning when they paid us, it means there's an inflow of money. But when our receivables increase from 3000 to 6000, it shows that um we sold more on credit, which is what? An outflow of money, right? So this minus this gives us what? Let me say 6000 minus 3000 is gonna give us what? 3000, right? We know it's gonna give us 3000, but when you're putting it, like when you're writing it here, you must interpret it, right, so that we put the appropriate sign. So in this case, receivable increased from 3,000 to 6,000. What caused our receivable to increase from 3,000 to 6,000? It shows that we sold more on credit, and therefore that's an outflow of money. Meaning I'm gonna put what? Negative 3,000 here. Shows that I'm subtracting, right? Now let's put it otherwise. If our receivables in 2021, 2022 were 6,000 and then they reduced to 3,000, it shows that one of our debtors paid us, so therefore we're reducing what? Our receivables. So therefore the difference between the two will be an inflow because money is coming to us. So therefore when we're putting it here, we're gonna put it on a positive side, right? Yes. Now let's go to payables, right? So with payables, guys, I want you to interpret it like interpret it as if you are taking out a loan. Ne? You know that when you're taking out a loan, it means that you are receiving money from whatever bank that gave you money or a loan, right? So for example, maybe 2021 you had nothing, right? And in 2022 your loans increased to 5,000. Ne? So in 2021 you did not have money, but in 2022 you had more money. So it shows that an increase in payables will result in what? Will result in what? Inflow to whatever entity that received the benefits from the bank, right? So an increase in payables will result in what? In an inflow of money. So in this case, what was the increase? The increase was what? 5,000. So therefore this is an inflow of money. Now in 2022 you had 5,000. No, 2021 you had 5,000, and then now in 2022 you're having 3,000. What caused your payables to decrease? My payables decreased because I repaid my payables, or I repaid my loan. So when I'm repaying my loan, what happens? It means I'm taking out money. So therefore what is that? That is an outflow of money. So therefore 5,000 minus 3,000 is gonna give me 2,000. Which sign are we using? Negative, because I took out money, which is cash outflow, right? Now what is our net change in working capital? I'm gonna say negative 3,000 minus 3,000 is gonna give me negative 6,000 plus 5,000, so I'm gonna have negative 1,000, right? So what is our uh, cash generated from operations? So our cash generated from operations is 205,000 minus 1,000, so it's gonna give me 204,000. So this is the amount that you're gonna take in the statement of cash flow under what? Under cash generated from operations. So remember, guys, in the statement of cash flow we have um, three activities, right? So in the statement of cash flow we have three activities. We have the operating activities, investing activities, and we have what is known as financing activities. So I'm going to post videos in my YouTube channel, like doing all of these activities bit by bit, like portion to portion. Like for example here, remember the first thing that comes here, we have what is known as cash generated from operations. So this total amount here, I'm gonna put it here, 204,000, right? After, what comes after, we have what is known as interest expense. So the interest expense that you have here, we're going to put it here. Let me show you. Okay, we have what is known as interest paid. We have what is known as income tax paid. We have dividends paid, right? So these are the things that fall under our cash generated from operations, right? So therefore, interest paid is an outflow of money, income tax outflow of money, dividends paid outflow of money. Why? Because we paid them, right? So I'm going to do a recorded I'm going to do a video explaining how we get our interest paid, income tax paid, and dividends paid. So guys, please make sure you watch the next videos that I'm gonna upload. Thank you guys.